Heya Cryptozens, it's 10 p.m. Pacific time. My name is Nikodemus, and welcome back to the Crypto Overnighter, where we take a nightly look at the crypto, NFT, and metaverse space. And keep in mind, nothing in this show should ever be considered financial advice. It is Monday, November 21st. It's 10 p.m. Pacific time, which means it's time to get started. Celsius is in the news again, and I'm feeling like Celsius and Voyager and Three Arrows Capital are all kind of happy about this mess with FTX, because now that means all of the attention is on Sam. We've spoken a number of times about FTX and how John J. Ray III is not at all impressed with how Sam and company ran things. The guy who cleaned up Enron's mess was amazed with the degree of utter incompetence shown. Enter Shobha Pillai. Pillai is an independent examiner hired by the bankruptcy court to take a look into things at Celsius. Pillai is apparently alleging that the company never set up the appropriate accounting and operational controls needed to handle customer funds safely. It was released in an interim report yesterday where Pillai laid out a number of things that she saw as part of her court-appointed investigation. Celsius Custody is an example. Celsius Custody is a program that was launched on April 15th, tax day in the U.S. This program was set up so that users could transfer, swap, and use coins as collateral. This is not a rewards-based program. And in fact, Celsius was ordered to set their custody program up. This came about because New Jersey security regulators felt there needed to be a greater, clearer separation between Celsius's earned product, which did provide rewards. And so Pillai had issues with the program. In her report, she said the custody program was launched, quote, without sufficient accounting and operational controls or technical infrastructure. And it was that lack of controls that enabled the shortfalls in custody wallet to be funded by other parts of the company. Quote, no effort was made to segregate or separately identify any assets associated with the withhold accounts, which were commingled in the main wallets. Now, which I think that's what sunk SBF, actually, in the court of public opinion, using client funds. And so this is causing some uncertainty as far as what assets belong to the customer at the time of the bankruptcy filing. Quote, as a result, customers now face uncertainty regarding which assets, if any, belong to them as of the bankruptcy filing. Now, for anybody who's interested, this interim report does do a good job of telling what happened to force Celsius to halt withdrawals on June 12th. She said this breaking point happened on June 11th. And that's because it was at that point that custody wallets became underfunded. By the 24th of June, that underfunding had reached $50.5 million. That was an increase of 24% in 2 weeks. She went on to say that Celsius's custody and withdrawal programs were thrown together in short order to comply with, quote, intense regulatory pressure from the New Jersey Bureau of Securities. They started an investigation last year into whether Celsius's earn program counted as a security. Now, this one is pretty shocking, although I shouldn't be surprised. According to Pillai's report, they didn't track their balance until May of 2021. Now, Celsius was founded in 2017, and until they had a run-in with regulators in May of last year, they used Google Sheets to keep track of the books. This comes after a notice last week. This filing in the bankruptcy court says that Celsius customers must file their claims by January 3rd of next year. That is, if they want to be eligible for disbursements from the case. So what this means is any person or entity, an entity could be a person, but it could also include things like DAOs or corporations. So if you're an entity that's filing a claim, that has to be in the court by 5 p.m. Eastern Time on the first working day of the new year, January 3rd. And so Celsius has a thread on Twitter explaining the deadline and how to file claims. And with all the brouhaha around FTX, you might have missed that a court ruled on November 1st. The judge ordered a probe into whether Celsius was a Ponzi scheme. Now, customers are alleging that Celsius was using assets of new users to cover the yields and to facilitate withdrawals. Speaking of withdrawals, the court voiced their objection to Celsius opening up for withdrawals and stablecoin sales. The next hearing is due to be held on custody and withdrawal products. That hearing is scheduled for December 5th. Remember when FTX was talking about buying Celsius? It was just October when Sam was saying that if he were to buy up Celsius's assets, it would be at a fair market price, and so not pennies on the dollar. I wonder what that would have looked like. Would that have been enough to see FTX through their current problems? Having Celsius's assets bought on discount might have been enough to fend off the wolves from the door. On the other hand, I think it's more likely that Sam, Caroline, and the rest of their merry band would just continue doing what they were doing, and then the problem would be just as bad, if not worse, in a few years. So now let's turn our attention from Celsius to the island nation of Japan. Because while Celsius isn't opening up withdrawals anytime soon, FTX Japan has plans. And those plans include resuming customer withdrawals by the end of the year. In a report that came out today from NHK, FTX Japan is getting ready to open withdrawals. This is after Japan's Financial Services Agency requested the agency stop doing business on November 10th. This was before Sam took FTX and Alameda Research into bankruptcy on November 11th. It wasn't really enough, though, because Japan's FSA ended up taking action against FTX Japan on the very next day. This was in response to reports of FTX's credit problems. And so the FSA ordered FTX Japan to shut down their over-the-counter derivatives trade, as well as suspending deposits from November 10th to December 9th. This means that the exchange should have submitted a plan describing how they intend to protect investors and give greater insight into the current situation. NHK cited an unnamed executive at the exchange who said that they had roughly 19.6 billion yen in cash. That's more than $138 million. And that was their balance as of the 10th when they were ordered to shut down. This action comes 5 days after FTX Japan halted withdrawals from the platform. At the time, they also cited voluntary compliance with those bankruptcy proceedings. Interestingly, according to financial services firm Perella Weinberg, many subsidiaries of FTX have, quote, solvent balance sheets, responsible management, and valuable franchises. And so Perella Weinberg actually found that several FTX subsidiaries that are debtors. That includes FTX Japan, FTX EU, FTX's Turkish operations, and Zuber. They were all found to be debtors. On the other hand, another FTX exchange based in Japan is Liquid, and they're not doing quite as well as FTX Japan. And they announced on Twitter that they were instructed by FTX Trading to suspend all trading operations. In that statement, Liquid states that they've paused all forms of trading because of the Chapter 11 bankruptcy filing in Delaware. They said, quote, "We are working through these issues and will endeavor to give a fuller update in due course." Now, we were just talking about FTX Turkey. Well, the nation of Turkey is getting involved as well, because their Financial Crimes Investigation Agency announced their own investigation into FTX. They said that not only will they be looking into the company, they'll be investigating the people and institutions involved. This means banks, electronic money institutions, and crypto asset providers. The agency also said that they'd be keeping an eye on FTX's activities to make sure that their anti-money laundering laws were being obeyed. Now, FTX Turkey is providing a Google form. This is for users to fill out to receive their funds. However, no delivery date has been given. And what they want you to do is share the international bank account number to proceed with the refund process. Which makes sense, really, because if, as Perella Weinberg says, if FTX Turkey is actually a debtor, they might have the funds needed to pay all their customers out. Because Turkey has actually kind of surprised me these last few months. They have such a big crypto market. When the Turkish lira took a nosedive earlier this year, I thought for sure they would at least legalize Bitcoin as legal tender. But not yet, I guess. Which is kind of disappointing because Turkey is becoming a player. They have 8 million citizens using cryptocurrencies. Now, according to the numbers out of one of their local exchanges, that is. Which you can see why. They're interested in crypto and stables denominated in US dollars to fight their rampant inflation. Kenya, on the other hand, they're getting closer because it was today that they introduced an amendment to Kenya's capital markets law. This amendment would require anyone who owns crypto, they would have to report their transactions for tax purposes. So this is the first time Kenya has applied financial regulations to cryptocurrency. According to this amendment, Kenyans would end up paying capital gains taxes when they sell or use crypto. And this part makes sense to me. Any crypto held for less than a year is going to be taxed as income. Income tax in Kenya is between 10 and 30%. Anything held for over a year and capital gains tax applies. And that's not including the excise duty of 20% that banks are already charging on all crypto trades. The author of the bill, Parliament member Abraham Kira, said, quote, "The amendment will provide for the definition of digital currencies, its creation through crypto mining, and provide for regulations around trading of digital currencies. The amendment will also outline responsibilities of persons or businesses trading in digital currencies, provide for its taxation, ownership, and provide for promotion of innovation in this area." Now, this bill defines cryptocurrencies as securities. It also provides for the licensing of individual traders and creates a centralized electronic register of transactions. Apparently, all transactions involving crypto in the entire country. They also took a look at consumer protection. They're setting up a fund, quote, "to protect investors from financial loss arising from the failure of a licensed broker or dealer." Like Turkey, Kenya is a player in the crypto space. And again, I have to assume it's due to poor local economic conditions, but a survey from Chainalysis puts Kenya at 19th place in worldwide in terms of crypto adoption, 5th in terms of peer-to-peer trading. Kenya has about 4 million users. That puts Kenya in 5th place in terms of rate of ownership at 8.5% of the population. And finally, I want to give you a bit of an update on American CryptoFed. Remember, we were talking about them last night. They're the first legally recognized decentralized autonomous organization in the United States. And now, they're in a fight with the Securities Exchange Commission. This fight is about the stablecoin Ducat and LOCK. Now, LOCK is their governance token. So, the DAO registered their tokens in their 2021 filing with the SEC. But now the SEC is telling them they have to stop selling those tokens. The claim from the SEC is that American CryptoFed left things out of their registration and misrepresented some facts. Now, apparently, they're going to fight the SEC without legal representation. A statement put out by their chief operating officer, Zhao Meng Zhao, confirmed that the DAO is going without legal counsel. He said, quote, "We just filed the notice of appearance according to the SEC's rules. This letter means that we just told the SEC we will represent ourselves without attorneys in this case." They also intend to file a motion extending the deadline for their response to the SEC. That would give them 20 days to start building their argument against the SEC and preventing their deregistration. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. We'll see you tomorrow night.